Good morning, Bitcoin, and welcome to another edition of your Bitcoin economic calendar. Today is Monday, September 28th. I am Mauricio Di Bartolomeo, co-founder of Leden.io, and here are your market-moving news for your upcoming week. Looking at the Bitcoin markets, we saw that Bitcoin had a slightly down week last week, opening at 10,920 and closing the week at 10,778, down $142 or 1.31%. Amongst the market-moving news that we had last week, we had a record-setting $1 billion worth of options expired last Friday. And additionally, we had later on Friday night, we had a report that allegedly the KuCoin exchange has been hacked. Details are still unclear, but we are probably going to be getting more information about that throughout the week. And it'll be interesting to see how digital asset prices hold up as more information gets released. Now, looking at the broader markets, we see that the S&P 500 had closed the week slightly higher after a very strong rally on Friday. Investors may look to continue this positive momentum on the coming week. However, we do have a slew of economic data coming out this week out of the US, including GDP, unemployment, and inflation. So a lot of these data points come out on Thursday. So it'll be likely a day of high volumes and potentially some volatility. So elsewhere in the markets, we see that gold had a pretty bad week last week. It closed down $90.30, so roughly down 4.63%. It will be interesting to see how gold reacts to the inflation news that's coming out later this week. And moving over to the FTX DeFi index, we saw that it had actually a pretty strong rebound and closed the week 4.3% higher after rebounding from a tumultuous drop. Now, it seems that the markets might have found some footing and that they might be looking to continue a rebounding trend this coming week. Having said that, we do have a lot of economic data hitting the tape this week, and a lot of that could challenge the uptrend. We will continue to monitor this and share any relevant information through our Twitter account at HODL with so make sure you follow us. And now let's take a look at some of the other trends that are at play right now. There was a really interesting article tweeted out this week by Michael Saylor, the CEO of MicroStrategies, that was actually put out by the Wall Street Journal, and it was titled, "Inflation is Already Here." There's a link to the article below, but what the article talks about is that essentially you're already starting to see inflation in some of the August numbers out of the US. For example, the article notes that the prices for at-home food or groceries is up 4.6% since August last year, which is the biggest rise in almost a decade. Now, this is similar to the stories that we're getting out of Mexico, where it shows here that their entire consumer price index was up 4.05% year over year, and that is way above their central bank's inflation target. Now, what can you do to protect yourself from inflation? Our savings accounts were actually designed to shelter your savings from inflation. Our USDC savings accounts are paying 11.7% APY, and our Bitcoin savings accounts are paying 6.5% APY. So check them out and make sure that you are taking care or protecting yourselves for any potential inflation that may be creeping up to your savings. And lastly, moving over to your difficulty commentary, Bitcoin difficulty is currently sitting at 19.31 terahashes, but it's set to adjust again this Friday. And the current difficulty adjustment is estimated at 20.44 terahashes, which will also signal a new all-time high in Bitcoin mining difficulty. To put this in perspective, the network difficulty back in the 2017 and 2018 peak was around 1.6 terahashes. So the network is actually 10 times stronger today than it was back then. And that wraps up your Bitcoin economic calendar for this week. If you like what you saw, make sure you subscribe and like and share with your friends. And don't forget to check out Leden.io, where you can get the best savings rates for your digital assets and the best tools to make the most of your digital wealth. Thanks and have an excellent week.